You make no friends in the pits and you take no prisoners. 1 minute you're up $500,000 in soybeans and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The revolution starts now.
We have to pass the bill so that you can find out what is in it.
Turn those machines back on!
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on earth.
The Peter Schiff Show is on.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories, your freedom. The Peter Schiff Show.
This week, I think, other than the Epstein client list, which I'm not going to get into during today's podcast, I think is the increased calls from within the Trump administration, and probably without as well, for Fed Chair Jerome Powell to resign, not to complete his term, but to prematurely leave office right now because he's doing such a horrible job. In fact, in a recent interview, Donald Trump said that the job of being Fed chairman was the easiest job in the world. Basically, any idiot could do it. And so we need to get rid of Powell because apparently, even though any idiot could do the job, Powell isn't even up to the task because he doesn't understand that rates need to be cut. And in fact, it's not just Trump that's saying this. Everybody, especially if you look on X at Bill Pulte, who is the head of the Federal Housing Finance Administration, he's repeatedly calling for Powell to step down. He's blaming Powell for the high cost of buying a home because he's saying the mortgage rates are much too high. And that's the same thing Trump is saying, that because of Powell, it's so expensive for the U.S. government to finance its debt. And so it's Powell's fault that the interest expense is so high because the Fed has interest rates sky high. In fact, I hear a lot of people talking about how we have sky high interest rates. We've got a 4 handle on the Fed funds rate. There is no way you can argue that a rate that low is sky high. In fact, all of the criticism of Powell is because he's too tight, when in reality, he is too loose, right? I am not a big fan of Powell either. I mean, I criticize him quite a bit, but I don't criticize him for not cutting rates. I criticize him because he cut rates. He cut them, he didn't cut them, rather. He took too long to raise them. He inherited low rates from his predecessor, and he left them too low for too long. And when he finally, belatedly, started to raise rates after claiming incorrectly that inflation was transitory, when he finally addressed the inflation problem, he was too late. I agree with Trump on that, but where I disagree with Trump is that he's too late to cut rates. What he was too early in doing was aborting the hikes. As I've said many times on the podcast, Powell stopped hiking too soon. He never got into restrictive territory. And the way you know that is because debt never stopped expanding. Consumer credit, corporate credit, government debt continued to hit new all-time record highs despite the rate hikes. And that's because the rate hikes were not enough. The rate hikes weren't high enough to cause a contraction in credit. Because remember, inflation is not just the expansion of the money supply, which did temporarily contract, although not nearly as much, and now it's back in expansion mode. But credit not only didn't contract, but accelerated its growth. And so the inflation fire that the Fed lit was never put out. What Trump really wants Powell to do is throw more gasoline on that fire. And because he won't do it, people want him to resign. In fact, if you look at the most recent statement by Trump during the week in one of these, Q&As, he said that we should have 1% interest rates. That's where he thinks rates should be. 1%. He says we deserve it, we should get it, And for some reason, this moron, this imbecile, Powell, is refusing to go to 1%. Now, think about that, because Trump is also talking about how strong the U.S. economy is, how it's unprecedented in its strength. It is the hottest economy in the world, according to Trump. And not just today, but historically. To hear Donald Trump talk about the current U.S. economy, this is the strongest it's ever been. I guess it's even stronger than it was when he was president the first time. Now, if the economy is this strong, why should interest rates be at 1%? Especially, and I'm going to get into the CPI data that came out earlier in the week during the podcast, but the official CPI rate is much closer to 3% than 2%. And so given that inflation is well above the BS so-called target that the Fed has adopted, but if we have above target inflation and the strongest economy ever, why should rates be at 1%? The first time the Fed lowered interest rates to 1%, it was Alan Greenspan. And this was in 2003. Now, what was going on in 2003 that caused Greenspan to lower rates to 1%, which was a mistake. And I criticized Greenspan for doing that back then when he did it. Because U.S. interest rates hadn't been 1% since 1950. And of course, in 1950, it was a whole different ballgame. I mean, we were on a gold standard. We had real money. We didn't have the national debt we have now. We did run up a big debt in World War II, but we were paying it down. But we had trade surpluses. I mean, we were a totally different economy back then than we are today. But that was the last time we had 1% interest rates, was 1950, before Greenspan brought them back down to 1% in 2003. But if you don't recall what was going on, first of all, we were in a recession. It was a mild recession, but we were in one. We had the September 11th, 2001 terrorist attack against the United States, where the planes crashed into the Twin Towers, knocking them down. Also, a plane went into the Pentagon. Another one crashed in a field. But we were at war, basically. Desert Storm or Desert Shield, whatever we called it. But we were in having war with Iraq. And the NASDAQ was in a brutal bear market. The NASDAQ had dropped by 80% from its peak. I think the S&P 500 was about 50% off of its peak. So, we had a massive bear market. We had the bursting of the dot-com bubble. We had recession. We had war. And, in those circumstances, Greenspan brought interest rates to 1%. Now, he only left them at 1% for a year. Despite all that stuff going on, they were only at 1% for a year. Now, the next mistake that Greenspan made was in normalizing rates too slowly. Remember, he was talking about a measured normalization because he was afraid of causing damage to the financial markets. Once he hooked them on the drug of 1% interest rates, he didn't want to take away that drug cold turkey, so he eased up. And so every time the Fed met, they would raise rates by about 1/4 point. So it took 17 hikes, right? Years and years and years. So by 2006, the Fed was finally back at 4.5%. And that's it. That's as high as they got, right? And that's all it took to prick the housing bubble and usher in the 2008 financial crisis. But 4.5% is basically, that's where we are right now. That's the interest rate we have right now. That is not a high rate. That is still historically low. I mean, the only historical precedence you have for 1% is in the immediate aftermath of the bursting of the dot-com bubble, right, and that recession, and the aftermath of the 2008 financial crisis, where we went to zero. See, that time we didn't even go to 1. That wasn't even low enough. We had to go all the way to 0. And we left rates at 0 for way too long. And then Janet Yellen was much too slow in raising them, at least at least Powell picked up the pace from Yellen. Yellen had one hike. Basically, that was it. The whole time she was Fed chair, rates stayed at zero. And if you remember, when Donald Trump ran for president the first time, he called out Janet Yellen for leaving interest rates too low. He accused her of being political, of trying to help the Obama administration by artificially boosting the economy with low interest rates. Well, that's exactly what he wants Powell to do. That's exactly why he wants to fire Powell or get Powell to resign, maybe over the controversy of the renovation costs of the Fed's headquarters. But whatever, he wants to get rid of Powell because he won't do for him exactly what he criticized Yellen of doing for Obama. Again, another example of the Trump hypocrisy, the difference between Trump as a candidate and Trump as a president. Because remember, he's very consistent, right? So at least I got to give Trump that. He's a hypocrite, but he is consistently hypocritical, right? Because when he ran for office the first time, he kept looking at these government unemployment numbers, right? The official numbers, 4.5%, 5%. And he kept saying, these numbers are BS. The real rate of unemployment is 10%, 15%, 20%, 30%. Every time he gave a speech, the real rate of unemployment was even higher, right, than the previous. He kept ratcheting it up, right? But the minute he was president, he pointed to the same unemployment figures that he said were fake when Obama was president, and then used those very figures to tout the success of his own economic policies because he said, look how low unemployment is. I'm doing great. And he's doing the same thing now. He's pointing to this bogus unemployment number and saying, hey, I've got the greatest economy. Look how low unemployment is based on the same fake numbers, right? Or the numbers that he accused of being fake when he wasn't president. So he's doing the same thing with the Fed. He was correct to criticize Yellen for being too easy. He is incorrect in his criticism of Powell for being too tight. But I think Trump is probably smart enough to realize that the last thing he wants is for Powell to actually resign, and he doesn't want to fire him. I think Trump wants to keep Powell exactly where he is so he can use him as a foil, so he can blame whatever problems happen on Powell. And if Powell doesn't cut rates and we do have a problem, then Trump can say, I told you so. I wanted to fire him, but I couldn't do it, right? If he does fire him, or if Powell resigns on his own or, from pressure, now what? Now Trump's going to put in a yes man to take his place, but now anything that guy does, or gal, although the front runner is this guy, Kevin Walsh, but whatever that person does, he's going to have to accept responsibility because it's the person that he just put in to take his place. So I think it's much better for Trump to just keep Powell where he is. Plus, if Powell does step down, you do risk a reaction in the markets. So though the markets don't seem to be reacting very much to the possibility, maybe they just think the same way that I do, that it's all just a bunch of talk, like a lot of the tariffs. They believe the tariffs are talk, and I'm going to get to that later. But I would agree. I think it's just talk, but I think it's also damaging the perception of Fed credibility. Because, I think if Powell were to step down, or even when Powell finishes his term, if they put in this guy, let's say Kevin Walsh, who I think is a bad choice. He was a FOMC member right after the 2008 financial crisis. I mean, he was there before the crisis. He was there, I think, from 2006 to 2011. So he didn't see the crisis coming, right? I saw it from a mile away, so he doesn't really know his stuff. But he was really like the liaison between the Fed and Wall Street during all the bailouts. I mean, everything the Fed did wrong following the 2008 financial crisis that it caused made the problem worse. So Walsh was at the Fed when they were laying the foundation for the 2008 financial crisis, and then he was at the Fed when they made all the mistakes with all the Wall Street and bank bailouts, right? So far as I'm concerned, he's a horrible candidate, and he's at the top of the short list to replace Powell, right? So he'd be way worse. But let's say this guy comes in and everybody believes he's just a yes man. And in fact, he did an interview this week in which he stated that he believes that there should actually be a partnership, an official partnership between the chairman of the Fed and the Secretary of the Treasury, that they should work together, which is a horrible idea. Now, I think they have been, kind of de facto partners, and they certainly were, I think, during the years after the 2008 financial crisis. It was pretty clear that they were acting hand in glove to me. But they needed to back away from that because they have to maintain at least a pretense that that's not happening. But if you make it official, if you actually say, hey, the Fed chair and the Secretary of the Treasury are working together as partners, well, you've completely destroyed even the appearance of credibility of Fed independence. And that's really all the dollar has. I mean, it doesn't have any real backing anymore. It's not defined by gold and silver, technically, the way it is in the Constitution and the way it was up until 1971. It's a pure fiat currency. And we have massive trade deficits and budget deficits. So the only thing the dollar's got is its reputation. And that's built on confidence. That's built on trust. I think it's misplaced confidence and trust. But a lot of it stems from the supposed independence between the Federal Reserve and the government. If you destroy even that pretense by officially proclaiming this partnership between the Fed chairman and the Powell, well then, or between the Fed chairman and the Secretary of Treasury, what do you got left? You got nothing. And I think it would be a dangerous step to make because, number one, even if they had this partnership, the Fed chairman only has one vote. There's 12 members of the FOMC. So the chairman of the Federal Reserve doesn't dictate monetary policy, right? It's up to the majority. And I actually think his credibility with the other 11 members would be lessened if they thought he was being political, right? They would just take everything he said with a grain of salt. It would probably make him less effective at his job in reality. But that might not be the perception. The perception would just be, the Fed chair calls the shots, and we all know he's a political hack. So there's no more independence. So that is the danger, I think, that Trump is pushing with his constant attacks. Because even if Powell resists all the calls for him to step aside, when he finally does, and we get a guy like Kevin Walsh as Fed chair, people are going to know that he's not really independent. And the question is, how will that impact the other 11 members? Will they completely ignore what he says? Or will he be able to lead the rest of the members in the direction that he wants to go? I mean, that's really the power of the Fed chair. He's kind of, the de facto leader, right? He's been in charge. And so people put more weighting. The other members maybe defer to his judgment. But part of that deference may be because they believe that he's independent. But if they believe that he's not, that he's just doing what he's being told by Trump and the Secretary of the Treasury, because the Secretary of the Treasury does what Trump wants, right? Scott Bessent would admit that his personal views are secondary to Donald Trump's. I mean, maybe he disagrees with Trump, behind the scenes, but at the end of the day, Trump is his boss. And so he's there to kind of echo whatever Trump wants him to say. And so if he was in partnership with the with the chairman of the Fed, then in effect, you have Donald Trump, who is the partner with the Fed chairman, which is kind of like making Donald Trump the Fed chair, which is what he wants to be in the first place. So if we're really going to have a partnership, right, between the Secretary of the Treasury and the chairman of the Fed, then why do we even need two men for the job, right? Just have one guy do both. And it doesn't even have to be the Secretary of the Treasury. Just make the president, whoever the president is, make him the Fed chair. Because that's basically what Kevin Walsh is saying. Make Donald Trump the chairman of the Federal Reserve. Okay, well, maybe that should be. Maybe we should say whoever's the president is the chairman of the Federal Reserve. Now, again, he still has to convince the other 11 members, right, to do what he wants, right, which is maybe would be harder than getting Congress to do what he wants. But we would at least drop the pretense. But I think all of this discussion is misplaced, is dangerous, and it's flat out wrong because Powell is being criticized for the wrong reason. He's being criticized for being too tight when in reality, he is too loose. Anyway, we got a quick commercial break, so stick around. Coming right back.
ED can get you down in more ways than one, but with help through HIMS, things can start looking up. Get a boost in and out of the bedroom with access to personalized treatments, including daily options for more spontaneous sex. Through HIMS, you can access personalized prescription treatments for ED, like Hard Mints and Sex RX Plus Climax Control. HIMS offers access to ED treatment options that cost 95% less than brand names. New Sex RX Plus testosterone support includes tadalafil for better bedroom performance and zinc for testosterone support. With hundreds of thousands of trusted subscribers, HIMS can help you find the ED option that works for you, if appropriate. Just fill out an intake form on their site and connect with a medical provider who can determine if treatment is right for you. The process is 100% online, which means no office visits and no pharmacy lines. No insurance is needed, and one low price covers everything from treatments to ongoing care. If prescribed, your medication ships discreetly to your door for free. Start your free online visit today at hims.com/gold. Find ED treatment that's up to 95% less than brand names at hims.com/gold. hims.com/gold. Actual price will depend on a product and subscription plan. Featured products include compounded drug products, which the FDA does not approve or verify for safety, effectiveness, or quality. Prescription required. See website for details, restrictions, and important safety information.
All right, I mentioned earlier in this podcast the inflation numbers, and we got the official government BS scorecard, the CPI for June, that came out midweek. And all eyes, of course, are on the CPI, trying to decide whether or not the Fed is going to cut rates, right? Whether or not inflation is low enough for a rate cut. And the consensus was that the consumer price index, the headline number, would rise by 0.3. And that's exactly what it did. 0.3. But I think what's more significant is that the prior month was unrevised at up 0.1. So the trend between May and June ain't good, right? Where prices are rising triple the rate they were a month ago on a year-over-year basis. And in fact, if you look at what the consensus forecast was for the number, it went from a low of minus 0.2 to positive 0.4. So much closer to the high end of estimates than the low end. You know, there were people looking for prices to come down. It was a substantial rise. Year over year, the CPI rose 2.7%. That was hotter than the 2.6% that was expected, and even more hot than the 2.4% from May. So inflation is well above the Fed's so-called 2% target, the way it's measured by the CPI, and it's headed in the wrong direction. Even more important if you look at the core. So ex food and energy, which the Fed claims is even more important, right? We got to strip out that volatile food and energy, right? Let's get to the core, right? That's supposedly even more important that it be 2%. The core was 2.9, which matched the consensus, but was a tenth hotter than the rearview mirror for May. So you've got core year over year CPI rising and up 2.9%, almost 3%. And even headline at 2.7 is closer to 3 than 2. Why would anybody be calling for rate cuts with inflation this much higher than 2% and rising, right? It's not even falling anymore. It is heating up. And in the context of 4.1% unemployment, if that's the real number, which it's not, but the government claims it's real, Trump claims it's real, Powell claims it's real. They're all touting how strong the labor market is, how low the unemployment rate is. Well, if the unemployment rate is this low, really, and the economy is really this strong, and inflation is so much higher than 2%, why would we be considering cutting rates? Because that's what the Fed is saying. They're looking at all this data, and they're still saying we're going to cut rates. We just don't know exactly when we're going to start, but they're coming. Why should the Fed even be hinting that rate cuts are coming when the data would argue that rates are still too low and they need to be raised? I think it proves that they all know that it's BS. If they really believed we had a strong economy, they would be hiking rates. The reason they're not hiking rates is because they know that the data is BS and we have a weak economy, and they're afraid of weakening it further by hiking rates. But they don't want to cut them because I think Powell knows, and I've said this, that the bond market is onto him, and that if he cuts in the face of this data, long-term rates are going to go up. So Pulte, right, who is criticizing Powell for high mortgage rates, if Powell actually does what he wants him to do and he cuts short-term rates, mortgage rates are probably going to go up. And so the Fed is staying pat and taking all the criticism. But if you think about it objectively too, if we've got 2.9% year over year core, right, almost 3%, when inflation was below 2%, by less than that, right? Because to be less than 2% target, you'd have to be 1.1 on the core, right? To be under 2% by 0.9. Well, when we were under 2% by a lot less than 0.9, interest rates were at zero and the Fed was doing QE. So in other words, when we were as far beneath 2% as we currently are above it, the Fed was in panic mode. Oh my God, we are so far below our 2% target that it justifies unprecedented easy money. We got to keep interest rates at zero. We got to gun the printing presses. We got to do massive quantitative easing because, we're so far below 2%. Yet when we're that much above 2%, well, yeah, it's just a question of time before we cut rates. Why is there no talk about the need to get inflation back down to 2%? Why do we just assume that it's going to go there on its own over the next couple of years? I mean, when inflation was well below 2%, or not even well below, just a little bit below, the Fed did not say, look, this is just temporary. It's nothing to worry about. Inflation is not going to stay below 2% for long. We'll just let it, stay on its own glide path. It'll get back up to 2% in a couple of years. There's no reason to panic. No. The Fed said we absolutely must do something right now. We can't take any chances that inflation goes back up to 2% on its own. It's so dangerous that we are below our target. Who cares if we overshoot? We need to do whatever we can to get the inflation rate back up to 2% and make sure it stays there, right? That's what the Fed was doing. And everybody supported the Fed in that nonsense. I mean, everybody other than me. Central banks around the world, the ECB, the Bank of Japan, they were all doing the same thing. When inflation, their official inflation rates were below 2%, they pulled out all the stops, right? They had to. It was an emergency. We got to do whatever it takes to get inflation back up to 2%. But when it's above 2%, they're not equally as vigilant, right? They don't, oh no, whatever it takes, we're going to do whatever it takes to get inflation back down to 2%. No, they're stopping well above 2% and just claiming that it'll just get there on its own. In fact, they can ease rates now. They don't have to fight inflation anymore. They can start cutting back on rates. They can grow the money supply, that they're confident that inflation is going to come back to 2%, even though there's nothing in the data that would instill that confidence. In fact, the real data should show the opposite. But just if you have any rudimentary understanding about inflation, what it is and where it comes from, it's clear that the monetary and fiscal policies that we're pursuing are inflationary and that the official rates are going a lot higher. In fact, the other thing that I criticize Powell for, other than being too easy, is his failure to criticize government, both the president and Congress. He should be criticizing everybody. The senators and the congressmen, they don't want Powell to be political. And he doesn't have to be political. He can criticize the Democrats and the Republicans because they're both guilty. They both have their fingerprints all over this coming train wreck. And so he doesn't have to be partisan. He doesn't have to just criticize the spending in the big, beautiful bill, because had we had the bill that the Democrats wanted, it may have been worse. There's no way that they would have cut government spending. So that's part of the problem. In fact, Donald Trump this week, in one of his many interviews, claimed that the big, beautiful bill was the best or most significant, I forget the exact word he used, legislation passed in the history of Congress. And then he said it saved America. Like, America was in danger, right? And this bill saved us. Saved us from what? Saved us from fiscal responsibility? Saved us from averting a crisis? What did it save us from? We are on the road to financial ruin, and the big, beautiful bill just steps on the gas pedal, right? Doesn't change course. We stay on the same road, headed for the same disaster, only we increase the velocity at which we're traveling down that road. So by what definition is that the greatest piece of legislation ever passed? Again, anything that happens under Trump's watch is the greatest. Everything he does is the best, right? That's part of the salesman in Trump, right? That's how he built his brand and built his reputation, being the best, being the greatest. And so he basically says the same nonsense now about the economy, because, of course, it's the Trump economy, so it must be the best. It must be the greatest. But this is what Powell should be criticizing. But he hasn't even done that. He hasn't said anything critical. The only thing he did criticize is the tariffs. That's the one thing that he's criticized, are the tariffs. And I think that is a mistake, because that is what creates the appearance of partisanship, that he's got a vendetta against Trump, that it is Trump derangement syndrome, because he hasn't really criticized other things that I think are a bigger factor, like the big, beautiful bill. I mean, he hasn't really criticized that. He's just criticizing the tariffs. But there's a lot of blame to go around on both sides of the aisle. And that is exactly what Powell should be doing, but he's not doing it. And of course, whoever replaces Powell certainly isn't going to do it. Speaking about both sides of the aisle, I wanted to mention something that's going on the other side of the pond. And I think it relates a lot to what happens here in the United States. But in the UK, they have just, passed whatever they do over there to lower the voting age down to 16 years old, right? It was 18. And that's where it is in the United States. And now it's 16. And I know there's a lot of people that think, it's democracy. Let's have more people voting. The more, the better. That is the problem with democracy. That's why the United States was established as a republic, because we don't want everybody voting. Least of all 16-year-olds, although I guess 15-year-olds, 14-year-olds would be even worse, but who knows? Maybe that's the direction that the UK is headed in, because if you're going to let 16-year-olds vote, well, why not 15? I mean, what the hell's the difference? And, the irony is, you got to be 18 to go into a bar and order a pint of warm beer in the UK. You got to be 18 to buy a pack of cigarettes. So the British government says, no, we can't let 17-year-olds or 16-year-olds choose to smoke cigarettes. They're not old enough to make that kind of choice. They're not old enough to weigh the pros and cons and the health benefits of smoking. So let's not let them smoke. Let's not let them drink until they're a little bit more mature, until they can make a more informed decision, right, about their own health, right? So let's hold off. But you know what? Let's let them vote, right? So they're not smart enough and mature enough to know if they should smoke a cigarette, but they are mature enough to know who should run the country. I mean, that is completely preposterous, right? So they might as well lower the drinking age and the cigarette age to 16 too. If they think 16-year-olds are so smart and should be making these important decisions for themselves, well, hell, why not let them make the same decisions for everybody else? I mean, the fact of the matter is, not only is 16 too young to vote, 18 is too young to vote. They should not be lowering the voting age in the UK. They should be raising it. They should be doing the same thing in the United States. And I know I've mentioned this before in a past podcast, but not everybody might have seen that. But since the British have elevated the topic, I wanted to address it again because I feel very strongly, that 18-year-olds should not vote. And I mean no offense to the 18-year-olds who are watching my podcast and who actually are competent enough to vote, right? I mean, I'm not, saying that all 18-year-olds would not be able to make an informed, educated vote. Some can, but the majority cannot. That is the problem. And so if I was still 18, I would support a higher voting age than 18, even if it meant that I couldn't vote. Because I know, and I would know as an 18-year-old, that even if I could vote, my vote's going to be canceled out by a bunch of idiots who are also 18. And so what difference does it make? If I'm going to vote, exercise my right to vote, but then other 18-year-olds basically cancel out my vote 10 times over, what good is it that I voted? Nothing. So I'd rather no 18-year-olds vote, even if I couldn't vote, because then I'd have a better chance of a good outcome of the election, having a good person win the election, which is actually the goal, right? It's not about the means, it's about the ends, right? So it's not about who votes, but about who wins, right? So I'd rather have a smaller pool of voters electing good officials to be in government than a larger pool electing bad ones. And some people might say, well, Peter, but voting is a right. Well, it really wasn't a right. I mean, I know the 19th Amendment kind of made it a right because it said the right to vote shall not be abridged on account of sex, right? And then the 26th Amendment says it shall not be abridged on account of you not being 18. So those amendments to the Constitution referred to voting as a right. But prior to those amendments, nowhere in the Constitution, nowhere in the Bill of Rights, nowhere in the Declaration of Independence was voting ever called a right by any of the founding fathers. They did not believe voting was a right, right? Life, liberty, property, the pursuit of happiness, those are rights. They are clearly defined as rights. There's nothing in any of our founding documents that says you have a right to vote, because you don't. It is a privilege, or at least it was until, the 19th Amendment. But why is voting a privilege and not a right, right? Well, you have a right to your life and your property and all that stuff, but voting is something that government is allowing you to do. It's not a natural right that you have from God. We've created a government and we're deciding who gets to vote. And if you remember, at least when it comes to the federal government, in the Constitution, the president was elected by the Electoral College, not directly by the people. Senators were appointed by state legislatures. So the people had no say in that. They didn't vote at all. But the House of Representatives was the one federal body where the representatives were chosen by an election where the people actually voted. But the people didn't all have a right to vote. It was up to the states to decide who would vote in those elections. Now, first of all, women couldn't vote, right? Most states, women were not allowed to vote, just men. Now, it would make no sense to have that distinction today, given the roles of the gender roles are a lot different than they were 250 years ago. But, back then, it really made no sense for women to vote, given their roles, right? Men were believed to be able to make a more informed decision. Now, today, that might not be the case, but it certainly was back then. But just because men could vote didn't mean all men could vote. No. I mean, most men weren't even eligible, right? So it wasn't just they excluded all the women. They excluded most of the men. I mean, first of all, you had to be 21 to vote. Now, back when the Constitution was ratified, picture a 21-year-old man. Most likely, guy's married, already has kids, probably left school at age 11 or 12. Maybe he got married at 17 or 18, right? He's been working. He's been working for 8 years, right? His parents aren't taking care of him anymore. He's established his own household, right? So this guy is out there working, paying taxes, raising a family. He's established himself in society. Okay, he's old enough to vote. Compare a 21-year-old in 1789 to an 18-year-old today, right? Still live with your parents, never worked a day in your life, right? Spend all your time in government schools, listening to a bunch of BS indoctrination by your socialist teachers, right? What the hell do you know about anything? I mean, maybe you've read some stuff and you're very idealistic, but you don't know anything about the real world. You've never even gotten a paycheck, let alone pay taxes. You certainly don't have a business. You've never employed anybody. You're not married. You don't have kids. I mean, it's a lot of 18-year-olds haven't even gone out on a date. So why are these people voting? They're too young to make those decisions, right? I would say that in order for a man or woman, for that matter, to have the life experience, the business experience that his counterpart had, or her counterpart in 1789, you'd have to be at least 30 years old, at a minimum. So we should raise the voting age to 30. They should do the same thing in Britain. Now, what else did they do to restrict the suffrage? They had literacy tests, right? You got to be able to prove that you're at least smart enough to read and write before we're going to let you vote. Now we let any idiot vote. You don't have to be able to read or write. Just get to the polls. We don't give a damn, right? Bring all the illiterates to the polls and let them vote, right? That's what we want. Why? Why do we want illiterates voting in our elections? It makes no sense. We want a good outcome. We just don't want to maximize the number of idiots who vote. But unfortunately, that's what a lot of politicians want, because the more idiots that vote, the more likely it is that they're going to win. Now, they also had property restrictions. All the states had these property restrictions, most of them, where you had to own property to vote. They thought, well, I want to see that you got a skin in the game. You got some stake, that you're smart enough to have acquired some property. And if you have property, well, then you can vote, right? Now, again, if I didn't own property, I wouldn't object to that, because I don't care about voting. I care about the outcome. I don't care if I vote. I care who wins. Like when I used to live in the States and I lived in Connecticut, and every time I voted, the candidate I voted for lost. Every time. I never voted for the winner. So who cares? I would have rather not be able to vote and have the guy I wanted to win, right? I would have been happier with that, right? The fact that I vote for the loser every time did nothing. So property restrictions should be there. We actually had poll taxes. That's where a poll tax came from, because the voting polls, the poll tax was, you want to vote, pay a tax. If you're not willing to pay the tax, then don't vote, right? And it doesn't have to be that high a tax, but how many people would not vote if they had to pay $10 to vote? No, a lot of people wouldn't vote, right? Well, if your vote is not worth $10, then screw it. Don't vote, right? Now, people would say, well, then only the rich are going to vote. Well, you don't have to be rich to afford $10, but if you can't afford $10, you shouldn't be voting. Now, again, people are going to say, well, then the rich are just going to vote to take away the rights and the property of the poor. No, they're not. They're not going to vote to steal anything. It's the poor that are going to vote to steal from the rich. That is the problem. And the problem is the government shouldn't be stealing from anybody. You see, if we still had courts that enforced the Constitution, it wouldn't even matter who wins, because whoever wins, they wouldn't have the power to do all the things that the government does all the time, right? All this redistributionist nonsense that people are voting politicians into office to do, none of this would happen if the Constitution was being enforced. But one of the reasons they can get away with it is because of how dumbed down our electorate is, because everybody is voting, and there are no qualifications on who could vote. Doesn't matter. And so the UK is going in the wrong direction by extending votes to even younger people than they had before. Another thing I wanted to talk about that was a big deal this week were the passage of that Genius Act. President Trump made a big deal praising all of the crypto people when he signed that. There's a couple more bills. They call this Crypto Week because there's some other bills. There's 3 bills in total that are basically a payoff to the crypto industry for all the money they spent helping to elect not only Donald Trump, but other members of Congress. A lot of money has been donated to these PACs that then give money to congressmen, senators on both sides of the aisle to be favorable towards Bitcoin and crypto. And so a lot of coverage of Crypto Week and of these bills. In fact, Bitcoin, I think the record high that I saw for Bitcoin was about $123,000 per Bitcoin. It pulled back to about 116,000 or so before gaining some support and bouncing, but not making a new high. Interestingly enough, though, as high as Bitcoin got in dollars, it never made a new high in euros, and it hasn't made a new high in Swiss francs. Now, I'm not saying that that's not impossible. It may do that, but it hasn't done that yet. So a lot of this is also dollar weakness, which is why Bitcoin made a new high, but also because I think that Bitcoin is becoming more and more concentrated in America. It's almost like, the new American pastime, other than baseball. It's now crypto. And more of the crypto ownership is being concentrated in Americans. And of course, more of it is being concentrated in Wall Street, right? It's owned by ETFs. It's owned by Bitcoin treasury companies. In fact, now you've got Ethereum treasury companies. Ether, I think, had an even bigger week finally than Bitcoin, and a lot of other altcoins, because of these bills that go way beyond Bitcoin. And I don't even think there's that much legislative significance of any of these bills. I think the primary purpose of all this legislation is basically to clothe Bitcoin and crypto, right, in the trappings of legitimacy. By having the government pass all this legislation, the crypto industry can use this legislation to try to get people to buy Bitcoin and other tokens. I mean, that's the whole part of legitimizing it. You see, the government has embraced Bitcoin and crypto. Donald Trump is the Bitcoin president. We're going to make Bitcoin, or the U.S., the crypto capital of the world, so you got to buy. In fact, they're really trying to get Wall Street. I think I read that they did something to allow like 401k plans to buy Bitcoin or other crypto tokens, trying to get Wall Street to recommend that their clients put money into Bitcoin, which is something that by and large they're not doing. I mean, I think in general, Wall Street is afraid to touch this because they don't want to recommend that people buy Bitcoin ETFs and then have them go down and then get sued and have to give their customers their money back. It's almost like a Bitcoin recommendation comes with a free put, which is why you're not going to recommend it. Because if it crashes, your client's going to file an arbitration and say, how could you recommend this? Totally unsuitable. It's nothing. It's a Ponzi. And, not only do I think that the customer would win, I don't even think the broker-dealer wants to fight the battle. It's not even worth the expenditure. They'll just pay the client off. So I don't think you're going to get all these recommendations from all these advisors. But this is what the industry wants. And I think that's really what all of this legislation is designed to do. It's just to create additional credibility, get the U.S. government, the U.S. Congress to embrace and promote Bitcoin so that you get more institutional ownership. So you get more investors buying it in their IRAs, in their 401ks, through these ETFs, through these companies, which ironically is the exact opposite of the intended purpose of Bitcoin, right? They're not really appealing to the guy who wants to be outside the system, who wants to be more anonymous and, basically stick it to the man, self-custody, your own private key. It's all about appealing to the masses through Wall Street. And what is the pitch? What is the crypto industry trying to sell investors? You're going to get rich, right? This Bitcoin's going to go to the moon. 1 million, 10 million, who knows? So you buy Bitcoin to get rich. You don't buy Bitcoin to escape the system, to get out of the system. No, you want to be a part of the system. This is just how to milk the system for as much money as possible, because this is where everybody's going to go. We're all going to be buying Bitcoin. All the big banks, all the Wall Street banks, the government, right? All those institutions that supposedly we don't like and we don't trust. That's why we want to buy Bitcoin, because they're all on board now, the Bitcoin train, right? So you got to hop on board or you're going to have fun staying poor. So we'll see if this, again, I keep saying maybe we've topped out. Maybe this is a sign of a blow off top, the end of this bubble when you've got so much hype. Bitcoin got to 123,000, but at the end of the day, that's not really much higher than it was earlier in the year, given all this nonsense. And of course, they're trying to tout these stable coins as the salvation of the dollar. Right? That's the biggest BS, to say that, these stable coins are going to save the dollar because they're denominated in dollars. Well, so what? I mean, there's nothing that stops anybody anywhere in the world from issuing a stable coin that's denominated or backed by euros or Swiss francs or yen or Australian dollars or any of these currencies. I mean, so what's so special about a dollar stable coin? Absolutely nothing. People are saying that, this is going to help create demand for treasuries because the issuers of stable coins are going to buy treasuries. Sure, they're going to buy treasuries, but that's not going to be enough to offset all the treasuries that China and Japan and Saudi Arabia and everybody else are no longer buying, let alone selling. And again, the stability of a dollar stable coin rests on the stability of the dollar. So at the end of the day, if people are losing confidence in the dollar, they're not going to buy dollar stable coins, right? They're going to be avoiding them or getting out of them, right? That's the whole reason that people are buying gold. The reason they're buying silver. By the way, during the week, silver got above $39 an ounce, right? We're almost at 40. I think we're going to be above 40 shortly. This is the first time since, I think, 2012 that silver got above 39. It pulled back slightly. I mean, I think it closed the week, around 38 and a half, yet silver stocks are still maybe more than 10% below their peak. That's how much they pulled back on a tiny 1.5% correction in the price of silver. You got a dumping of silver stocks, which had made new 52-week highs as silver went up. And then, of course, it's very weak hands in the gold and silver mining stocks. People still don't have the conviction of this trade. It's climbing a wall of worry, and there's tremendous amount of worry on this wall, which is why I think these stocks are still great buys. Platinum almost hit 1,500. You remember, on my podcast, I specifically told people a couple months ago, when platinum was still below 1,000, I said, you got to buy it. Buy platinum. I said, gold is 3 times the price of platinum. Platinum's risen 50%. That was a great trade. Now, I think platinum may pull back a little bit more. I still like the silver trade better because I think that's going to explode. And I think once it goes to 40, the move to 50 can be very quick. But in the meantime, gold has been going sideways. It's like 3,350, 3,400. I mean, it's been trending sideways because the NASDAQ has been making new highs. It made a new high last week. The S&P made new all-time highs. In fact, on Friday, the S&P and the NASDAQ made new record highs. Now, they didn't close there. They actually closed slightly negative on the day, but they still printed new highs. That's why the interest in gold has temporarily taken a back seat. And that's really what's driving crypto. It's the appetite for risk assets. Gold has been going sideways, and in that environment, Bitcoin has risen along with the NASDAQ and all this extra hype surrounded by Crypto Week. But getting back to this stablecoin. So the stablecoins are not going to save the dollar because they don't increase the appeal of the dollar. People are saying, well, everyone's just going to use these stablecoins in global commerce, and so that's going to create a need for the dollar. They're not going to use these coins. If the world is de-dollarizing, then they're going to de-dollar stablecoin too. They don't care. They don't care how you wrap up the dollar, what kind of fancy packaging you want to put around a dollar. At the end of the day, it's still a dollar. And if I don't want the dollar because the U.S. is running huge budget deficits and huge trade deficits and imposing these tariffs, then why the hell am I going to want a U.S. dollar stablecoin? I am not. I mean, ultimately, the way crypto is going, the way this thing ends up is if you want a stable coin, you can't have a US dollar coin because it's not stable, because there's no stability to the dollar, right? Why do you want to hitch your boat to a sinking ship, right? You're going to sink with it. Makes no sense. So if you really want a stable coin, you need something stable to anchor it, and that's gold. And there's no talk about that, but that's where the stable coin should be headed. Gold-backed stable coins, tokenized gold. That makes perfect sense. To tokenize US dollars makes no sense at all. What is the benefit of that? What is the benefit of holding a stable coin and earning no interest? I mean, hell, I could put my money in a money market fund and earn 4.5. Why do I want to put it in a stable coin and earn nothing? I've got plenty of liquidity in my money market. I could write checks. I could send ACH transfers. I could use my debit card. I could fund a PayPal or Venmo or a Zelle. Why the hell would I need a stable coin and give up all that interest and let the issuer earn all the interest instead of me? Makes no sense. The main purpose of stable coins is to trade crypto, to trade Bitcoin. I don't care about trading Bitcoin because I don't trade it. So why do I need a stable coin? But I can see the benefit of a stable coin backed by gold, because there, right, it's not easy to use gold as a medium of exchange the way it is dollars. But if you tokenize it, it's very easy. Now, gold can be held by a custodian who can issue tokens, and now we can use those tokens to buy and sell stuff. We can use it as a medium of exchange. We can make instant payments around the world at basically no cost, or practically no cost, at the speed of light. So there is a viable reason to tokenize gold. And gold's not really paying interest anyway. So if I'm going to store my gold and I'm not going to earn any interest, well, why not store it in a stable coin where I don't earn any interest, but I get all the added convenience? I mean, that's how all the crypto people are constantly criticizing gold, because they say, well, you can't use it to make payments. Oh, yes, you can. I mean, you could use it even without tokenization. But yes, I agree. If I want to buy something from somebody in Indonesia tonight and I want to pay for it, I can't really send them some gold physically. But if I had a gold token, a token that was issued that I can then transfer to that person in Indonesia, and I can transfer the ownership of the gold that never moves, right? That's the same concept as a stable coin backed by U.S. treasuries. The treasuries don't move, right? The dollars don't move. What moves is the token that corresponds to ownership of those treasuries, of those dollars. Not really the treasuries, because you don't get any interest, but the dollars that are there. I can do the same thing with gold, but that makes sense. So we can conduct global payments in U.S. dollars, in gold, with tokens that are tied to and back to gold. So that's what makes sense. That's what nobody is talking about other than me. And I think ultimately that is where we're headed. Anyway, that's it for today's podcast. Remember, if you're not currently a subscriber to my YouTube channel, make sure and subscribe. I don't know what it's going to take to get me to 600,000 subscribers, but let's make that a goal to see if that's even possible. People have said maybe there's some kind of wall where YouTube won't let me get to 600,000 subscribers. So tell your friends, get them to subscribe to this YouTube channel. Make sure and like it, comment on it. The more engagement, I guess, the better for their algorithms. Also, I'm getting close to 1.2 million followers on X. And, I'm a lot more active there. I'm constantly posting on X. So if you're not currently following me on X, make sure and do that. Bye for now.